You have the plan and the right mindset. So now you need an actual door into the market. That door is called a brokerage account, and opening one is far easier than most beginners fear. This is part 2 of our 4-part guide for anyone brand new to investing. Today we'll learn what a broker is, how to choose a good one, and the small traps to avoid. You cannot simply walk onto a stock exchange and buy shares yourself. Instead, you use a middleman called a broker who places your orders into the market for you. A modern broker is just an app or website that connects your money to the world's exchanges. You deposit some cash, you tap buy, and the broker delivers the shares into your account. Think of it as a bank account that can also hold stocks and funds. Not all brokers are equal, so a beginner should judge them on a few simple things. First, low fees, because every dollar lost to fees is a dollar stolen from your future returns. Second, safety, meaning the broker is properly regulated and your assets are protected. Third, ease of use, because a clean, simple app keeps you calm and prevents costly mistakes. Fourth, fractional shares, which let you buy a slice of an expensive stock or fund with any amount. Well-known examples that many beginners use include Fidelity, Charles Schwab, and Vanguard. Any large, regulated, low-cost broker will do the job perfectly well for a long-term investor. When you sign up, you'll be asked what type of account you want. The simplest is a standard brokerage account, flexible money you can invest and withdraw whenever you like. There are also retirement accounts, which lock money away longer in exchange for valuable tax savings. For most beginners, a basic brokerage account is the easy and sensible place to start. You can always add a tax-advantaged retirement account later as your confidence grows. Opening the account itself takes about as long as signing up for any normal app. You provide some personal details and verify your identity, which is standard and required by law. Then you connect your bank and move in your first deposit to fund the account. A quiet but important tip: never share your password and let only you move money in and out. Once the cash lands, your account is armed and ready to make its very first purchase. Now let us shine a bright light on fees, because they're the silent enemy of every investor. The good news is that buying and selling stocks is now often completely free of commission. But funds carry a small yearly fee called an expense ratio, taken quietly from your returns. For a broad index fund, you want an expense ratio well under 0.1%. A cheap index fund might charge just $3 a year for every $10,000 you invest. An expensive active fund could charge $100 or more for that very same $10,000. Over decades, that gap silently eats an enormous slice of your final wealth. So the rule is simple: always lean toward the broad, boring, low-cost fund. There's one more rule beginners often hear about: the pattern day trader rule. In the United States, if you make many rapid day trades, you generally need at least $25,000 in the account. But here is the happy secret: you never wanted a day trade in the first place. We are long-term owners, so this rule simply does not touch us at all. It is really a warning sign pointing straight at the risky behavior we already choose to avoid. A perfectly fair worry is whether your money is truly safe inside a broker. With a large, regulated broker, your shares are held in your name and protected even if the firm itself fails. Your real risk is not the broker. It is your own urge to tinker and overtrade. The calmest setup is an account you fund steadily and then check only now and then. You do not need a fortune to begin, and you certainly should not wait until you have one. Thanks to fractional shares, you can start with as little as the price of a single coffee. Beginning small lets you learn the buttons without risking money that would hurt to lose. The goal of this step is not to get rich today, it is simply to get set up and ready. So let us lock in part 2 in one clear picture. A broker is your door to the market, an app that holds your cash, your stocks, and your funds. Choose one that is low cost, regulated, simple, and offers fractional shares. Open a basic brokerage account and fund it with an amount you can comfortably spare. Guard against fees and against the urge to overtrade, and ignore the day trader rule entirely. Remember, the account is only the door, it is not yet the investment itself. In the next part, we finally answer the big question: What exactly should a beginner buy? I will see you in the next one, with your account open and ready to go.